and founder of Yellow Tunnel, and today we're going to have a live trading room open to trade stock and options using our technology and strategy roundtable. Strategy roundtable. We talk about current market conditions, see if there's any opportunities in the market, and where to expect short-term and long-term. For those of you who are new, welcome. This is my brief bio. Basically, I've been trading for over 20 years now, mentoring and teaching subscribers how to trade stock and options. My background is technology. I worked as an executive in several financial startups, fintech startups here in Chicago, broker dealers and hedge funds. And my background is artificial intelligence, building signals based on neural networks, artificial intelligence to help me manage my own portfolio. And then we have Keith from Options Hotline who joined us over a year ago, who specializes in options trading. He was a market maker and worked at hedge funds. So that's the experience. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. If this is the first time you see these disclosures, I encourage you to visit optionscreening.com so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Sylvia, John, Michael, Phil, thank you for joining, guys. We have a lot of people. I like that. Thank you. All right, before we jump into trading psychology, let's talk about what, we can start talking about end of the year. What happened to my Chrome? Oops. Sorry. Okay. So let's talk about market as we approach an end of the year. So if you look at the 10-year yield, right? First of all, let's look at the yield. You can see a pattern of lower highs and lower lows, and since April of this year, basically indicating that expectation that the Fed will continue to lower interest rates and maybe even more aggressively if we do see signs of unemployment data to cool off. Stable. It definitely broke through the support level 4.2 and pulling back today. If you look at the dollar, also stable because it kind of didn't go anywhere since Liberation Day, right, from the April. Trading sideways, but oversold, right? It benefits, Fortune 500 companies that have global exposure to the revenue, and also benefits emerging markets. You can see a strong rebound in China and Hong Kong and Vietnam and other countries. High yield, proxy for risk taking, has been pretty strong since April, right? Continues to grind higher. We're at year-to-date high. VIX is at 16. QQQ trying to break out, retesting all-time highs. Spiders is also retesting all-time highs. Has been using, bouncing off of 20-day moving average. And we have a strong performance in silver, kind of exponential vertical move up in silver, gold miners. So kind of a tale of two cities, right? On one hand, people are concerned with tariffs. They're concerned about government shutdown today. They're concerned about rise in unemployment potentially. So they're hedging with gold and silver, but at the same time, they're also buying equities and Bitcoin. So you can definitely see kind of a divergence. And we'll see how long this divergence can last. What else? And Bitcoin hasn't really gone anywhere since May, right? So you can see it's trading at the same level. It has been a proxy for risk taken, but at the same time, Nvidia is, I think it's at all-time high, or making new all-time highs. So you can still see some stocks that have a strong momentum continues to grind higher. So, stocks that high beta or don't have momentum that kind of been lagging. If you look at the yellow tunnel, right, for today we have aggressive power trader, our main model, short-term model. The model basically runs every day. We traded in a live trading room every morning, and signals gets generated every day, and we post them here. So today we have IBM as a signal. I mean, I like that signal. Short term, I think this is a good trade. And even maybe more than short term, you can see it's outperforming the market. This was posted today. HP energy is pulling back today, so HP is under pressure, but you can still see since earnings in August, it's been a strong uptrend. And then what was the final? General Motors, and General Motors is also in a strong uptrend. So, you know, kind of building the top, but you can see vertical move to the upside. So if you're a momentum trader, short-term trader, these are the good signals that you can potentially consider trading. You can hold them for 1 or 2 days, like the model suggests. Some people, including me, sometimes I hold it for 1 week, right? Because if I want to have exposure to, let's say, consumer discretionary, you know, General Motors, then maybe I would hold it for longer. And according to the model for spiders, it sees that potentially we can, next 10 days it sees flat 660. We're currently at 663. 1 month from now, 640. The next 2 months is 640. So it shows you that a longer term, medium term, the market is overbought, and it's been overbought for the past few months, right? It continues to kind of just grinding higher without any meaningful digestion or pullback. So markets are overbought. I think Warren Buffett, you know, the valuations indicator hit multi-decade high in terms of how overbought the S&P is. But nonetheless, you know, since there is no negative catalyst, the market continues to grind higher. So it sees 663 support, 677 overhead resistance, and potentially reaching 640 in the next few months as we approach the earnings season. All right, let's look at bar chart, another place we can look at their model, basically model built on the, instead of artificial intelligence, neural networks is built on your regular trends, right? Like moving averages, RSI, ATR. So you can see weak short-term, medium-term average. Long-term is actually strong long-term momentum. So you can see strong long-term, strong momentum. Short-term, it's consolidating, it's losing momentum, and medium-term, probably average. And in terms of gamma, now I'm looking at the positioning data, right? It's very important when you trade, not only look at the chart patterns and price action, but also positioning, where money is flowing. Do people buy bonds? Are they buying net inflows into the ETFs or net outflows? And you can see right now, 6,600 has been a strong support. So 6,600 is still a strong support. S&P puts 6,650, exactly where we're trading right now. Overhead resistance is 6,700. So basically, based on positioning, you can see. Before I do that, let's just change the months. Let's look, since we're going to look at the, let's look at October expiration. At October expiration, November and December expiration. This is where most of the positions are. Right? You can see still not a lot of positioning. October it's growing 40 billion, but still historically very low positioning. So market is susceptible if there is a negative news like escalation in tariffs or rise in unemployment, potentially government shutdown if it's prolonged, right? If they come out and say, listen, we're not reached an agreement between, Republicans and Democrats, we're going to shut down government till end of the year or beyond. Then obviously market doesn't expect that. And with the 40 billion position in October, there isn't about what 27-30 billion dollars in December. So people are more concerned about December than November. Then potentially, market could pull back. If it pulls back below 6,600, then the sell-off could accelerate. But basically, if you look at the supply and demand for options, for SPX options futures, you can see one standard deviation move right somewhere in here. approaching 6,800. Goldman Sachs, I think they already, RBC and a few other wealth management company already kind of projected 6,800 to 7,000 is where the market is heading towards the end of the year. So scenario number one, right? If there's no negative news, then we could potentially get to the 7,000 level, right? So break through that level. So that's scenario number one. Scenario number two, we're just trading between in the range, right? Maybe slightly higher than, you know, eventually break through the 6,700, but in the range between one standard deviation, right, left and right, somewhere between 6,400. The way the model predicted trades, yellow tunnel model says 6,400 potentially in the next month or two. So we're trading somewhere between 6,400 and 6,800 as a scenario number two. But there's definitely risk in the market. We've seen unemployment. Employment data is getting worse and worse and cooling. We see construction data is getting worse and worse and potentially will cause layoffs in construction sector. And inflation, you know, every month there is a mixed bag between CPI and PPI data. So you can definitely build a case where market is just going to be range bound, right? And then scenario number three, right? You know, maybe you know, we put 100% tariffs on China, can reach an agreement with China and TikTok, and you know how much soybeans they're going to buy, or employment data is going to continue. You know, instead of expected 4.5% unemployment rate by end of the year, maybe it'll be 5%, right? Kind of but that could also create potentially pressure to the downside. So those are the three scenarios to consider. Scenario number one, we're heading higher, and we're going to make new highs, maybe close the year somewhere between 6,800 to 7,000. Scenario two, we're just going to trade sideways. I kind of like Bitcoin not going anywhere for a few months. And then scenario number three, signs of recession, and market is going to pull back more. So how many of you say one? Kyun, Lalit, Michael, Paula, Phil. All right, a lot of people. That's awesome. John, G, Sylvia, Devender, Chop Robbins. Chop, sorry, I'm not going to say last name. But thank you for joining. This is great. How many of you say one? You agree with Goldman Sachs? We're going to end the year at somewhere between 6,800 and 7,000. Two, no, Vlad. I mean, there's good and bad news. We're probably going to trade in a range bound for the next few months. And you know, earnings is going to be kind of going nowhere. And then scenario number three, we're heading lower. Phil, one. Lalit, one. John, what do you think? Kyun, let me know if I mispronounce your name. I apologize if I do. Michael? Paula? Devender? Chop? Right, most of you said one, actually. I don't have a lot of threes today. Flat, okay, two, thank you, Chop. Right, so I'm gonna go with one. I think it is a choppy market right now. September has been usually a weak month. We actually, looks like today's the last day of September. We're gonna add on a positive note, right? So kind of an unusual month, but October, November usually is stronger time of the year from seasonality point of view. So assuming that there is no escalation in tariffs or unemployment is not going to be more than 4.5% by end of the year, and inflation is not going to rapidly move higher from the tariffs, then scenario number one. And I agree. I think target of 6,800 to 7,000 seems reasonable to me, and that's how I would play right now. Maybe not chase the market, but wait for pullbacks, right? Wait for these short-term. I think we're gonna have shallow pullbacks. I mean, we could get to 6,400, 6,500. It's possible if there's some negative news, but that would be, I would use it as an opportunity to add, right? I would use this as an opportunity to add. How do we help on yellow tunnel? So I briefly mentioned yellow tunnel, the aggressive power trader service. So I like this model because this is based on neural network, right? The model algorithm that learns on earnings data, learns on price action, and looks for patterns and makes prediction, right? Using latest advances in AI, and produces signal every single day. In live trading room, I actually trade these signals, right? And if you need to have trading ideas, right? Then you can actually see these signals, right? IBM, I think if you don't have technology and you're thinking about, maybe IBM makes sense, right? It didn't have great earnings, but it recovered, closed the gap, consolidating, and going into the next earnings cycle, potentially can go higher. If you want to look at the history, let's say what was yesterday, right? You can see, Morgan Stanley, Halliburton, right? So you can type in Morgan Stanley. Maybe you want to, exposure to banking. Okay, it looks strong, right? Strong uptrend. Halliburton, looks strong. Sorry, wrong Halliburton. Looks like it's broke out of the range and continues to grind higher. So these are different signals that you can trade. Model provides you entry and exit point. It basically says, ideally you want to buy at 158. If it reaches 160, it's overbought. Maybe you want to trim the position. But you get these signals, right? You can go to AI analysis and type in, okay, what do you think about NVIDIA? And it will tell you what the model sees about NVIDIA, right? It says, potentially next 10 days, you can get to 181. We're already at 186. We have a strong rally in the past couple of days, but it is overbought. It doesn't see 180 for the next few months. So you definitely can see that the momentum is picking up in NVIDIA, and maybe that's enough for you to say, okay, if this breakout is confirmed, then I'm going to be long NVIDIA or semiconductors. So that's aggressive power trader. We also have weekly power trader. It's the same concept, but the model is trained and to make predictions, inference engine for a longer period of time, right? So here we're talking about 5 to 10 days. It's not meant to be day traded, but you hold position for 1 or 2 weeks based on what the model is being trained on. You can also hold the position longer, for a couple of months. I forgot to turn on my camera. Sorry. Decide I'm going to start using the camera. I'll have to restart. Oh no, you can see it. Oh, perfect. No, that's cool. How do I make it? Sharing. Chance, ball, squash. That's good. So you can definitely, the weekly power trader is the longer term signals. For 5 to 10 days, you can hold it longer, right? The idea is to only have 4 active positions, especially if you're new to trading. If you're new to trading, I would say, or new to our service, start with 4 active positions and don't risk more than 2.5% of account value. This way, if you said 1, well, let's say, next unemployment data on Friday, right? Assuming no government shutdown, that's another risk. But assuming no government shutdown, we're going to have unemployment data on Friday, and then maybe unemployment rate jumped from 4.3 to now 4.6, right? The market doesn't expect that, right? Then you could have a bigger than expected pullback, right? But then at least that you only have 4 active positions, 2.5% of account value per position, so you have 10% drawdown, right? That's your maximum drawdown. And then in terms of weekly power trading, we've seen different signals. So insurance company, Aflac, again, Halliburton, healthcare, Medtronic, maybe you want to have medium-term exposure to healthcare. Medtronic looks like a strong, move to the upside since April. Looks like briefly broke through the year-to-date high. So then maybe that's again, Morgan Stanley, some of the utilities companies like NI, right? NI looks in strong uptrend. So you have signals, and then you can make a decision again when to enter, when to exit position. You can look at the history, right? This model runs every week, so data is posted every Sunday. And same thing, you have an AI analysis if you want to analyze your own symbol, right? Liquid, most of the S&P, most liquid symbols you can analyze here and make a prediction. So that's an AI analysis. If you want to actually, so aggressive trader and weekly power trader, these are signals generated every day or every week, where you would have to make a decision when to enter, when to exit the position. If you're not sure, or you have a question, Vlad, what if NVIDIA gaps up, right? Or if Aflac gaps down, do I enter the position, then you can again participate in live trading room and look at the dynamic power trader. So dynamic power trader is the signals, it's, same thing from weekly trader and aggressive power trader, but the signals that I actually trade, right? Some of these signals I trade, some of them I do not, right? I don't want to be overly exposed in any given sector. So, and you can see all of my orders and positions. If you type in your phone number, you'll get an SMS message every time I trade. You can see history of my positions, but you can see, let's say from today, I trimmed Caterpillar position, right? This was a good trade. I took half of the position off. Yesterday, I tried to sell Spider's call spread. So it's a combination of, I bought Halliburton. So it's a combination of both stock and option trades. You can see my orders, you can see my positions, right? If you want to leverage, right, instead of a trading stock, or you want to trade options, then you can, it gives you a choice. You can buy either this week Friday's expiration or next week Friday expiration and buy options. But same thing, you would consider entering the trade at 51.82, and at 52.82 you would consider trimming your position. So that's dynamic power trader. Any questions on aggressive power trader, weekly power trader, or okay? So the next is the earnings power trader. Earnings power trader, I'm taking advantages of the elevated volatility, elevated implied volatility during earnings, right? This is the highest uncertainty is during earnings. And today, after the close, we have Nike announcing earnings. So same idea. You can see all of my orders and positions, and today I actually traded Nike. But here I'm looking for kind of asymmetrical returns, right? If you follow my webinars, if you go here, and you follow some of the webinars that I published in this section, recorded webinars, trading discipline, trade analysis, I always talk about return on capital. Let me see, I think I have it here, open link. Very important topic. Call spreads, overnight risk. Maybe it's here, play. Oh yeah, so under market plan, sorry. Return on capital, probability of success, and estimated move, right? Very important topics. I encourage you to review them. Why they're important? Because when you trade as a retail trader, you can look for asymmetrical returns, right? Where you risk very, very little, but you make a lot of return on capital. As long as you understand that high return on capital trades have low probability of success, right? If you want to structure your trade where most of your trades are successful, then you have a low return on capital. So on earnings power trader, I'm trying to find these asymmetrical returns, right? So in this example, I'm selling put spread in Nike. I'll make it maybe a little bit bigger. Right, so I sold a put spread 65.64 put spread because it's a very large position 65 and it's beyond one standard deviation move, which, this example, I don't think Nike is going to have a bad earnings. And if you look at the put call ratio and how people are positioning, it seems like people are positioned bullish for Nike earnings. So I sold the credit put spread, received 24 cents, but at the same time, there's a lot of position at 75 strike. So I bought 76 call for 22 cents. And the net transaction is 2 cents, right? So I received the credit of 2 cents, basically meaning that as long as the stock is above 65 and doesn't drop below 65 level, right? Doesn't on Friday, before Friday doesn't close below 65 level, then I'm risking 2 cents and potentially can make $1 return, right? So this would be an example where you have a small investment in terms of capital, how much you invest in. You basically, it's flat, you don't have to pay anything, or in this case, receive 2 cents, but potentially can make $1, right? I mean, there's a downside risk because I sold a put spread, but this is an example where sometimes I'm long volatility, sometimes I'm short volatility, right? I do iron condors, I do butterflies, but these are the type of more advanced multi-legged strategies where I'm trying to find these asymmetrical returns. Same thing, with dynamic power trader. When I was trying to get into the sell call spread, spider's call spread, and get filled, but same thing, I was trying to collect 65 cents and risk only 35 cents, right? On 0 days till expiration options on by waiting only 24 hours. So that's a dynamic power trader and earnings power trader. Any questions on that? Let's see if there's any questions. Nope. All right, and then profit accelerator. Not a lot of people are not comfortable trading options. They just want stock trades. So profit accelerator is geared toward just stock trades, right? So you can see, I try to pick just the, do just the stock. Instead of trading Bank of America options, I trade stock. Instead of trading, Caterpillar options, I actually trade stock. And you can see example of stock trades. Any questions on the yellow tunnel services? Aggressive power trader, weekly power trader. Okay. There's no questions. I think I covered most of the material. We can kind of, let's see, let's look at some of the medium term, right? Weekly chart, medium term. So retail kind of consolidating, right? Not going anywhere. Energy also gave up most of the gains from last week. Metals and miners is one of the strong, right? So I think right now the strategy is momentum trading. Whether it's metals and miners or gold and silver, definitely momentum trading. You can see consumer discretionary making new all-time highs, right? Teslas of the world continues to grind higher. That has a strong momentum. Healthcare is underperforming. Utilities, right? Strong momentum in utilities making new highs. Consumer staples, right? So you can see safety versus risk on versus risk off. You can see that safety asset classes like consumer staples that are underperforming in healthcare, which is good for the market, right? That means people are taking risk in consumer discretionary, in technology stocks, right? XLK continues to make new highs. Industrials are in strong momentum. Some of the stocks like General Electric, they're in strong momentum and trying to break out. So that's good. Banks, right? Strong performance in banks. Energy has been underperforming, not going anywhere. Materials have been underperforming. Home builders taking a pause, right? It was the fear that, inflation is going to be stubborn and rates might not go as high as low, rates are not going to go as low as everybody expects. So you can definitely see pullback in home builders. Biotech has been strong, right? Since April, it's been a strong uptrend, retesting 2024. 2025 high, retesting 2024 highs. Value stocks, so you have a broadening of participation. Small caps are in strong momentum, mid caps are in strong momentum, equal weighted S&P in strong momentum. You can see broadening of the rally, which is also positive for the market. That's about it. The only area of concern is not the only, but bear argument would be Bitcoin, right? Bitcoin has been a good proxy for risk taking, but it hasn't done anything since end of 24, January of 25. We're at the same level as we are from January 25, right? And usually Bitcoin is the one that leading the risk on the rally. Obviously, another bearish argument would be, why is gold at the all-time high, right? Because that's usually associated with hedging, and people are concerned with some of the risks out there. So okay, any questions? Perfect. Okay, so again, I would maybe not chase the market at these levels, right? It's elevated, but I would say I think pullback's going to be short-lived and shallow, buy and pullbacks. I would follow momentum trading. I think you can see like crypto is a perfect example where it hasn't done anything for the past 12 months. So then I would wait for a breakout before I would commit money into, unless you want to do kind of market neutral strategies, which is fine. And take advantage of Yellow Tunnel. Sign up for any of these services. We do offer 30-day money back guarantee. You can look at the pricing page. And I hope to see you guys in the live trading room. We do have a lot of people today. I appreciate your time. Thank you very much. And I hope to see you guys Actually, I'm traveling next 2 weeks, so I won't, I won't be here for the next 2 weeks, but we'll resume 2 weeks after. All right, Devinder, G, John, Kyun, Lalit, Michael, Paula, thank you very much. Have a great day, and keep an eye on the emails. I will send at least 5-minute video on the market updates, right? These 5-minute strategy roundtable. This is market trend analysis for the next 2 weeks. So add info@yellowtunnel.com to your list of contacts in your email provider, and I will keep you guys in the loop every week. On Wednesdays I would send a recap and see if anything stands out. Thank you very much, and have a great day.